I've been talking about an impending drop. Now that it's happening, what's next? Find out. Let's go ahead and get today's analysis started here. Looks like I'm on the 1 minute chart with my 15-minute chart drawings pulled up. The first thing I want to draw your attention to is the 70% retracement level at 24.79. The price opened and spun at that level before, boom, just being sent straight down. Wow. And then we did see this fling up, and at this point, actually right where this the intersection of the price and this trend line occurs, that's right where I exited my last round of puts. I played 3 rounds of puts today, opened up a 4th set, I think, actually, and that's a set I'm holding for tomorrow because I am expecting a gap down. I'm expecting a breakaway gap at this point. I know, that's insane. Really, more downside? Yeah. Better believe it. This is not done yet. I don't think so. You're going to see that the implied volatility is rising. Look at it go. And I think that this rise in implied volatility is going to look something like it did before June and May when you saw it just skyrocketing. I'm pretty sure we're in a similar position now. What's happening next? I think it's going to keep going down, like I said. And the reason being is we are officially in a vertical run down. And I've pulled up Bukowski's webpage here so I can run through it really quickly. And you can just read some of his notes, all right? So he says the price moves down in a steep drop for at least 4 sessions. All right, we're there. And he has some notes about how far they go, when they retrace, all right? And this would be the slingshot that a lot of people have been waiting for. So 1, 2, 3, 4, 5, 4 more big dips could be followed by a median retrace. That is to say, the 50% retracement from the run. And there's an 81% chance of that, and that will be a great swing trade. How will we know when the vertical run is done, though? When are we going to find the bottom? Well, Bukowski does mention that really tall candles can signal that. And he has an example here, and you can see here at point A, there are a few red candles and they're pretty small, and the overlap here is pretty minor. There is definitely some overlap between the candles, but generally the majority of each candle is outside of the previous day's trading range. And this lasted 1, 2, 3, 4, 5 days. I think this is a daily chart. And it finally bottomed at point B. And you can see how tall these candles get. And relative to the candles prior, they're very tall. So when we look at AMC's daily chart, we're gonna see something similar where we see those 4 consecutive days of just bleeding red. Let's see here. I'm gonna turn on my default, which would be my daily drawings. There we go. Okay, and here we have 1, 2, 3, 4 big red days. And sure enough, we're approaching that $23 price target for Friday just based on the options open interest, the puts specifically. What's super curious here is the volume is increasing. Look at this increasing volume trend. Look at the implied volatility increasing, and the RSI still hasn't reached the oversold level. And remember, once the RSI hits 30, that is not necessarily a signal of reversal. The signal for reversal in the RSI occurs when the indicator is moving out of the oversold or out of the overbought region, and how it does so. I think that we're going to see the RSI plunge deep into the oversold, and I mean deep. Who knows, down to 20 maybe, okay? And then once it's down there, it might not even come back up for air for a while. All right, you really could see something like that. And I've said that in the past before, just be prepared. The bears are gaining a ton of momentum. And I remember where this 24.97 price target came from. It comes from this big vertical, this big measured move down that I had on the weekly charts. I'm gonna go ahead and show that too because I think it's becoming more and more relevant. I'm gonna back out here. I'm gonna keep it in the day actually, but I'm gonna go to 2 years. Okay, and I'm gonna blow this up. So yeah, this is where I get that $7 price target from. It's not really a price. I guess it is a price target because of the triangle, but whether or not we reach it is still has yet to be seen. It is really low, but it is possible that this is where the price will encounter the longest trend on the charts. And I wouldn't be surprised to see that. I mean, to see it this week would be ridiculous. I really think that to get down here would take months. All right, most likely. If the price reaches $7, which it may, and don't discount that. Do not discount that. The company is profitless and it cannot repay its debts. If the company cannot turn a profit, you really have to start thinking critically. The fundamentals matter. And now we're going to see how much that matters. If the price does reach 7, there is a good chance that it could rebound, all right? And it might even come all the way back up. You never know. This stock is incredibly volatile. And in the vertical rundown, there is a chance for a complete recovery. So that is to say, this measured move down that starts up here, first leg, corrective phase, and this third leg, the height of this pattern could serve as a slingshot. And now we're starting to see that potential form. We're starting to see it form now. However, this move is nowhere done, nowhere over yet. Okay, the height of the first leg by 43% is the price target for a measured move down, all right? So I'm just gonna figure this out really quick, just off the cuff. Let's say that this is the high of $44.43, so $44, and the low is $20. Okay, you got a $24, let's just take half of that, all right? $12, okay. So let's take $12 and subtract it from the top of the corrective phase, which was at around $32. I'm talking about $20, right? Which is right here. So we're gonna at least probably see the price test that low again. And that would set up an opportunity for the bulls to have a sweet double bottom. But again, that's gonna have to appear on the charts before I get excited about it. And even if that double bottom does appear, the price will need to close above the prior minor high before confirming. And that's gonna happen at 32.12 or something like that, that last minor high right here, the top of the corrective phase, 32.23. So the bulls have a long way to go, but they are hoping, or the bullish thesis is to hope for a big double bottom here. I think that we're gonna see a second leg equal to the height of the first leg. And what was that? That was like 44 to 20, $24, and we're starting at like 32. That's around $7. It's just that's the way the charts look. It's very possible. I don't think we're gonna get there today though. I really think it would take a long time. And I don't think this is over though. I think we're gonna see a new major low, and the tallest black candle yet. And if there was a gap in between today's close and tomorrow's open, I would not be surprised to see a gap right there. And you never know, maybe the price drops a crazy amount the next day too. But these tall candles would signify that the vertical run is probably over, and then that bounce can ensue, right? And let's just be really straightforward about it. That $23.45 level is going to be important on the way back up as well. All of these levels that we have found resistance at are going to be working against the bulls on the recovery. This being at $24, it's about the median of the height of this vertical run down. So, you know, this is all making sense. I think that we're about to see the bottom of this run. I don't think it's today. I think it's probably Friday. Probably gonna see the bottom this week. It's probably not gonna be 7, and we're probably gonna see that retrace before we start moving even lower. Again, it just depends. I think realistically, we're gonna reach that $18 price target I had, which is here from this broadening descending wedge. And yesterday I said this would be an ugly dive, right? Just an ugly dive. And that's exactly what I'm looking at. And this bar is pretty tall, but look at how it's not as tall as these other bars within a month. When I see a bar this big, that's red, I'll say, okay, maybe this is the bottom. But today I was trying to call the bottom, and I mean, I missed it 3 different times because it just kept falling. And this is very realistic. And there even is a little gap through here, but it's less than 25 cents. And per Volkowski, that's not worth considering. Now, I mean, you can just see, right? The gap filled. But regardless, I think we have a ways to go down. I'm going to talk about some other stocks too that I'm starting to watch. I'm starting to diversify my portfolio a little bit because why not? Let's see here. Let's talk about Genprex. Yeah, Genprex. I got into this stock because I was looking at the scanner and just looking for stocks that had made a big move, and this thing popped up. It had shot up like 123% or something. Look at this big fat green candle. Like, this is the kind of thing you want to see happen in AMC, right? Wouldn't you just love to see that in AMC? It's not though, it's Genprex. Okay, so I'm gonna change my time frame here so that this charting makes a little more sense. Yeah, here it is. Okay, so what do I see? I see a big flagpole, and this yellow line is a downtrend, okay? And, or is that a downtrend? This red line is definitely a downtrend. I'm not sure what that yellow one is. It is also a downtrend, but it's from a different time period. I should probably just delete this. That's muddling my charts. There we go. That is clean. Okay. So as you can see, we formed this really nice pennant, and I call it a pennant because it's only a couple of days old. I don't want to call it a falling wedge, not until it's at least 3 weeks. So we have a big flagpole, and there was a high and tight flag in here which did move higher but then failed breakdown, and now we're in consolidation. And you can see the price bouncing off at that trend line. This is really good. The trend has been broken through, it closed above, it tested it, and now what? I think that the price has closed above this pennant, and also has bounced off of the 61.8 retracement level. Let's see if I can grab these levels here. That's so small, you can't even see that. Let me blow it up just a little bit. Kaboom! Right, and that tail right there. So when I saw the price bouncing there off that 61.8% level, I said, hey, you know what? I'm getting into this, and I bought a bunch of calls. They were dirt cheap because the stock price is so low, and then boom, the price flew up and it didn't give back all of the gains. So, I mean, these are some really volatile candles. I'm looking forward to watching this stock run. So that's Genprex. I'm starting to watch that. Oracle as well. I'm also watching Oracle. Oracle had some incredible earnings. You can see the price just fly up. It just soared, massive gap, and then it collapsed. And this would be an inverted dead cat bounce, okay? And Bukowski would say, hey, this is probably going lower. So I did a little analysis here, and I think it's on my daily chart. Yes, here it is. Gonna change my time frame, and yes, now it's clear. So we did have a rise and a triangle. And look at this, breakdown, it double bottomed, confirmed, moved back up into the pattern, came down, and at this touch point, this is where I start this right angled and ascending formation. And we have 1, 2, 3, 4, 5 touch points, and what happened today was the price closed just outside. You can see this touch point here, and the price came up just a little bit. This might be a partial decline. Yeah, the price only bounced a little bit before getting smashed back down. It has now closed outside of the pattern, so I'm looking for that confirmation with a close continue tomorrow, a little lower outside of here, and ultimately the price target for that pattern at the downside is $79.76. So I think we might see some downside there. Let's talk about American Airlines. Is not on here. Okay, that's fine, I can type it in. Okay, American Airlines. This is the weekly chart. It's in a big ascending triangle. I want to zoom in a little bit though. There it is. So I had seen this rising wedge and the price breaking out above here, but there is some overhead resistance at $18.83 right there. And the price did have a really hard time and was very uncomfortable above that level. And I wasn't gonna go long on it, not until it broke a trend line that I believe is on my weekly. Okay, I had to turn on log scale. I wasn't on log scale. So I'm not going to buy into the stock until we get above this trend line. This is a broken down trend, and you can see the price interacting with it. All right, so that's what I have for today's video. I did make some really good money today on puts, and I think tomorrow I'm going to continue to do the same. I'm looking out for a big, tall, red candle to start to mark the end of the vertical run down, and then I'll be flipping the calls, of course, and riding that wave up, but that hasn't shown up yet.